Hey traders, in this video I'm going to show you some real life examples of my best entry that started making me real money and the trading psychology of what happened with yesterday's candlestick doji. Alright, let's get into it. So looking back at here, firstly I'm going to go through some engulfing patterns and I'll just show you the one that we took back here with Bitcoin. So, going along here, you're sort of looking at all these sort of candlesticks and, you're wondering why didn't I buy, like anywhere along here? Why was it that I bought here? On this one here, so we're kind of looking at going from low, high, higher, low, and a higher high, and then that's what interested me the most. And then it came back down here and found support. I'll just open this up a bit more so we can see it a lot clearer. And so the main thing is we've had a nice big push, and then we've pulled back and we've found support, and we've got doji on the support line, and then we've pushed up again and we've got a shooting star and it's brought us back down. One of the main things I want to look at here is, I'll just put a quick line there down that low, the previous low here. So this low here, so if you were to go up there, it traded up here and then it pulled back and then all of a sudden it started taking off again. So as soon as it took off, like around about here, or there would have been a lot of people entering the market in around about here, and they would have put the stops just below here. So when we go up and we've come back down, so we've got a high, a low, lower high, and a lower low on a shorter term time frame than this here, a low, a high, a higher low, and a higher high. So by definition, this is the longer term uptrend than this shorter term downtrend. Here, another thing that I want to add to this as well is the divergence. So this is money flow coming into the market. Like this is strength coming into the market. This is actually weakness in the market. But what we want to take note of is how big money play the game. And so if we get a low here and a high, and then we've come back down and found support on the 50 moving average, which is really good. We've got doji indecision, and usually after a doji's indecision, when we get a full body candle, that's usually the direction of the market, which way it goes. So we've got a low here and then a high, shooting stars, come back down, and big money have orchestrated this. They've traded down below this here to get rid of anyone else's stop losses that were here. So if you did actually get in here and put your stop loss below here, by this date here, you're out. They've taken your shares at a cheaper price, and then the rally actually starts. So as soon as this happened here, and I saw this happening, and we've got divergence, straight away I thought to myself, oh well, look at that, we've got a beautiful engulfing pattern that's closed above the 50 and the 9 EMA, and we've got increased volume above the previous day. So this was my entry here. So start buying the best in your watch list, the best breakouts in your watch list. So anyway, we started buying there at that time, and there was another buy here, breaking these previous highs. But anyway, that's not what we're after at the moment. What we're looking at is the engulfing pattern. I just want to go through and have a look and just see, let's say from, we could go from this low here, there's an engulfing there, it didn't work. Well, actually, if you would have had your stops below here, it would have worked. But anyway, it's that's a very long, wide, and loose candle, that one there. But we've gone up and we've come back down, and now we've got a harami, and this actually indicates that's what this is here. It's like a spinning top, but it's also a harami, which in the Japanese rice trader terms, this is called a pregnant woman. And so basically, this green candle trading is inside the red candle body. And so the Japanese will call this a harami. And so this basically means that the selling has stopped. When you see one of these come down here and we've got stochastics oversold, that's usually coming into near a buy signal. So anyway, we've gone up, we've got a little bit of an engulfing there, and we've gone up, pull back again, got an engulfing here, there's an entry there. And we've come back down here, not quite there, there's an engulfing there, but it didn't actually work. We've come back down here, we've got an engulfing there, that's the one that worked. Another engulfing there, another engulfing there, another engulfing there. So we can see here we've got 1, 2, that worked, one that didn't work, but I wouldn't have bought this one here because I want to push and a pullback. So after we get a pullback, we've got an engulfing here. If you would have been buying that engulfing there with the stops below the low here, you still would have made it. And here we've got another engulfing pattern that happened there, and then have a look at what happened. Like it just kind of took off, and on a very nice advance. But we don't buy once, we buy 2 or 3 times. So let's just say we've got one entry here, another entry in, another entry here. So we've got 3 entries in, say at this stage here, around about. And then we're coming up to, these highs here. So if we're looking at these engulfing patterns up here, the ones that actually didn't work, like that one there, if you would have got in there, yes, you would have, stayed in the market all the way until over here. But when we get to the top here, so we broke the 100k mark, we've got an engulfing just above the 100k mark. I don't know if I was actually buying there. I think I might have bought a smaller position. But anyway, as soon as we got up to here, and then we've got a doji at the top. So doji with stochastics overbought, basically that says to me sell. So as soon as that came through, I was actually selling at this line right here. As soon as this candle turned red, I was actually getting out. So I got 40% out of them. 40% of my portfolio was sold on this date here, and I still got around about 60% of my portfolio still in the market. Here we've got an engulfing pattern that didn't work, which is okay. What we want to do is put the probabilities in our favor of when it actually, looks like it's going to work. We want to be putting money into the market. And, like on the best engulfing patterns, we want to be buying, 2 or 3 of our best in our watch list. And when it comes to ones that are a little bit, suspicious like this one here, we only buy half of one position. So we're risking half of 1% of our account on something like this. And anyway, we got stopped out of this one here. And I actually bought in again here and I got stopped out, lost another 0.5% there. So if you think about it, between these two here, I've lost 1%. But if you look at all the entries here, I've actually done quite well. This here, what's that, 65 up to around about 106. So, that's a pretty good increase. And then, another couple of entries here, and another good few increases. So that's the engulfing pattern. This pattern actually was the pattern. Like when I was first starting and I was broke, and I wasn't broke, but I wasn't making very good money at all in the markets, and I was just getting beaten up all the time, and I didn't really know what to do, and so it was this engulfing pattern here that it's not just this one here, but several of these engulfing patterns that actually what they did, they started my account growing in real term, and things started to change quite rapidly because I started buying these things. Let's just have a very quick look at the psychology of one of these here, and we'll just open it right up. So if we have a look at the close of this candle here, it's come across here, and now it's open there, and it's traded green, and then all of a sudden it's traded red, and then we'll come back up and it's closed on a negative. So it opened there and actually closed there. So the body of the candle is red because more money came out of the market than went in. Straight away, next morning, it's open there and we've traded a little bit red. And then we come back through and turn green. And then we've come back through 2 moving averages there, 50 being a major. And we've got an engulfing pattern. So basically, this pattern here completely engulfs the body of that candle there. We've got increasing volume here and we've got divergence. So this to me was a buy. There was no second guessing on that one there. So I was quite happy to get into that one there. And we had a pretty good result from it so far. Now let's just go through. I just want to have a look at today. I made another video not long ago, and for some reason it got deleted. So I'm kind of making another one. So if we go and have a look here, as soon as we get up to here, this candle here was very suspicious. It was wide and loose candle. So basically, big money on a situation like this, all they're doing is taking out anyone, or they're encouraging buyers to buy up here, because this was once a very big green candle. So as soon as it breaks this high here, everyone's buying, and then it's gone up there and then came all the way back down here. So now, if you were to be buying like up here, you would have had your stops somewhere, or you could have had your stops anywhere, but anywhere from there to there, big money had come down and there's taken out all the stops and then brought it up to here. What they want to do here, this is like just a big shakeout to the north and the south, just to get rid of weak hands basically. So the ones that are going to sell quickly in a rally, they're the ones that they want to get rid of. And then we've gone all the way up here. We've got a beautiful doji, and then we've climbed again. And it's like this is a little bit suspicious, this one here, because there's a lot of people got out of the market. Like if you look at the size of this candle here, not many people stayed in the market with this one here. And then straight away in the next one over, we've got a perfect looking doji with stochastics overbought. So the very next candle here, on this red candle here, I was actually selling. So I sold 40% of my lot. As soon as this one turned red, and I've still got 60% in the market now. So I'm still happy to stay in the market, and I'm looking for more entries, to be honest, because I think that Trump, I think players are starting a little bit itchy feet, because they want to enter the markets because they can see that Trump, the way Wall Street replied to Trump's victory was very, very good, and it's reminds me quite a bit of 2017 when Trump got in. So if we're having a look at these here, I'll just open this right up and we'll just have a quick squeeze and see what it looks like. So here we've had a big decline, bounce on the 50, and then another decline down here. And then we've got a Harami, which basically says that the selling has stopped, and we've got that on support, and then we've taken off. So here I was actually buying, I can't remember where I was buying. It was either just above here or just above this line here. But in any case, whatever happened, wherever I was buying, I don't remember. I have to go back and check my account. But anyway, I got stopped out. So I lost 0.5% here. I lost 0.5% on this one here and 0.5% on this one here. But that to me is okay, because I've made plenty of percents on the way up from those engulfing patterns and a few other candlestick reversal patterns. Anyway, we've sold off and we've come back down, found support, and then we've got a Harami here, which basically says that the selling has stopped again. Indecision. Now let's just have a look here. So usually after indecision, whichever way we decide to go is usually the way that the market will trade from there. And I do like this setup a lot, because we've got indecision, and then we've got a wide and loose candle here. So what we've done here, we've closed here and we've opened here. We've traded green, and all of a sudden we've come back down and we've traded red, and it's come all the way back down here. So this was a very ugly red candle at one stage, and everyone was going, oh, this is horrible, like so. But anyway, they're thinking, okay, well, it doesn't matter, we're safe, because we had our stop losses there, and below here as well. And below here as well. So, but big money have orchestrated this as well. They've come down and taken out everyone's stop losses below these lows here, below that support level there. All they've done is clean house. And once they've cleaned up the house and they've got cheap shares, they're happy to go. And so, they go back up here and they close the day. That's what happened this morning. And then straight away, we've opened up here and traded down a fraction. And then we've come back through, and only just recently in the last couple of hours, we've traded through the high of this one here, which is very good. Also, another thing that we can see on this one here is we have divergence. So we've got money flow coming in and we've got trading coming down. Now, as I said, this is orchestrated. So big money have even done this. So big money are bringing money into the market, but they're also coming down to take out everyone's stop losses, so they can pick up everyone else's shares at around about 89,000 instead of buying them at around about 94,000. That's exactly what they're after. That's not to say that this can't still go down. This is just, we've got to read each candle for each day for what it is. And so at the moment, that's what the story is saying. So this is actually looking like indecision, big, wide and loose, collecting all the weak hands. And now it looks like, we're going to have to wait till the morning to see what the decision is, the decision that's going to be made. I just want to go through a couple of others, and this one here, virtual. So I'm looking at this one. This is on my radar for tomorrow morning. And as you can probably see why. So we've had a nice big push from here, from the low. So we've got a support breakout here, and it started here, and it went all the way up there. I'll put a Fibonacci retracement on this one. So we've started here, we've taken it all the way up to the top there and dragged it across, so we can kind of read it down to where the candles are now. But so that's a 100% move. From there up to there is a 100% move, and the retracement, the pullback down here, was 50%. I'll just open this right up here so we can actually see it. So we've bounced on the 50 as well, beautifully. But have a look at this doji. Like, this here is massive indecision. And then all of a sudden, we've opened here and we've traded a little bit red just below the 50. Now we've come back up through the 50 and we've traded green. So this has turned from a red candle to a green candle, and we've gone up to there. So it would be interesting to see what happens above this high here. Let me just place an alert there. So the high on this one here is 2.803. Now I'm just going to do 2.81 will do. So 2.81. All right, there we go, alert set. So anyway, that's going to alert me as soon as it goes above here. So if this candle here, the green one, breaks this previous high here, I'm probably going to be thinking to myself, okay, well, this is probably going to go up and move higher than this one here. So anyway, stochastics are oversold on this one. We've got a perfect doji on the 50, and we've got a 50% retracement, and things are looking green at the moment. So we'll just have to wait and see what happens. Right, traders, I am going to leave it at that. I hope you have a good night, and I'll talk to you again soon. Bye-bye.